Hello again from my coronavirus basement headquarters. I'm Bill Borsma, here to talk about life insurance and the current environment. While there are virus driven underwriting issues being implemented by some insurance carriers, I'm going to focus on other things to think about during the COVID times. Each of these issues are applicable during normal times, but it might be a little easier to get attention now. I recently read a piece about the percentage of people feeling the cash flow crunch as a result of layoffs and other disruptions of business. Yes, that's to be expected, even for the most responsible of us. Even those not in a real crunch are choosing to delay mortgage payments and discretionary purchases simply because there is too much uncertainty moving forward. What should policy owners keep in mind now? If someone is in a cash crunch and life insurance premiums would be an undue burden, there may be options, but they need to be understood and enacted appropriately. Some life insurance policies can handle premiums not being paid, but many can't. And though this may sound strange, depending on the kind of policy you have, you better not pay premium the right way. Whole life and term premiums work much different than universal life-based products. You might be able to simply not pay the premium on your UL policy and be fine in the short run, but not in every case. On the other hand, not paying on a whole life policy might result in it flipping to a reduced paid up contract or extended term, which is likely a permanent result. Automatic premium loans and utilizing paid up additions and dividends might be in the cards, but all of these options and the ramifications should be analyzed and modeled. It's times like these that many look to the cash value life insurance as a source of funds, and this may be a good choice and it may not be. Some policies have very favorable loan features while others don't. I'll take the bet that most policy owners don't understand the difference in contracts. Some have low interest rates and others are very high. Taking out a loan meaningfully affects the policy performance in some contracts while it's negligible on others. Is borrowing out of the policy the best thing to do, or might it be better to use the policy as collateral and borrow from an external source? Has that option even been presented? Has it been analyzed? Have the various options been objectively compared? Another potential source of liquidity for life insurance would be a life settlement. This is when one goes to the secondary market to sell a policy to a third party. Life settlements have a very small target market, and I certainly wouldn't run to a settlement just to satisfy a liquidity crunch, as the policy may be very important over the long term. However, there are many policies out there that have been riding a thin edge for a long time, and current circumstances might be putting some policy owners over that edge. Maybe they were wondering if they could afford to increase the premiums, and now that decision has been made for them. Selling a policy with $100,000 of cash value for $500,000 may not have looked attractive enough before, but it does now. The life settlement market is more aggressive now than it has been for a long time, so it may be worth some attention, but you'd better know what you're doing. And that's also someplace I can help due to my decades of experience in this market. When you're looking for cash flow, given the typical term insurance premium, there might not be a lot to gain from evaluating coverage, but I'll suggest there's more to it than many understand. Much term insurance on the books remains competitive, but much of it is not. I regularly see drastically overpriced policies where the insured individuals have been squandering money for years. Why not use this as an opportunity to review your portfolio to make sure your money's working for you the best it can be? Does it ever make sense to waste money? Many people also have their term insurance through professional associations and group term through their employers. While this may be better than nothing and valuable for those who can't otherwise qualify for insurance, it is also some of the most expensive and poor quality insurance available in the market. The potential money saved for individually underwritten life insurance with dramatically better contractual features and rights would surprise most policy owners, and I help people replace that coverage all the time. Finally, for now, do you even need to be paying premiums? Regarding cash value and permanent life insurance, though much of my work involves rescuing underfunded life insurance policies that need more of a cash infusion, sometimes it's the other way around. It's not uncommon for me to meet with policy owners who would like to reduce or terminate their premiums, and they're completely surprised when I tell them they don't need to keep paying. Many whole life policies are funded well enough for dividends to cover premiums, and this can be proved through an objective analysis. Even though guaranteed universal life is often notoriously susceptible to rigid premium requirements, I've seen situations where premiums can be terminated for a number of years with no adverse effect. In the latter, unnecessary premiums are simply a waste of money. The bottom line is that objective and independent life insurance analysis and management, which is important during any times, is especially important during times like these. Thanks for your time today. And as always, please don't hesitate to call or email with anything we can do to help. We look forward to it, and have a good day.